About that situation. I don't pay much attention to it because it's one of those that's transient. Yes, it's a big issue right now, and it probably does reflect incredible demand for the physical stuff. And that's interesting in itself because owning the physical stuff instead of the paper version of the physical stuff indicates concern. If you want to put it another way, panic. I want to hold the real stuff, okay? Not a piece of paper that's contingent upon certain things not occurring. Okay, so that could be an underlying statement of what's going on out there in terms of sentiment among large acquirers of gold. And right now, the public is really not, the American public in particular, has not gotten behind the gold bandwagon. They've missed a tripling in the price of gold over the last 15 years because they've been focused on the stock market. Now that bubble's starting to break. The question is, well, will gold go down with the stock market? Yes, in a brief period it might. Well, for some reason this past week, which has been disastrous for stocks, gold didn't go down 2%, if you want to call that down. So I think that the money flow is moving, and I think the silver situation is very unique because there's a mistake being made. One, it does move with gold ultimately. It does not move with commodities generally. Their historical correlation is not good. Its correlation with gold is very good. Right now, it's in a slingshot underperformance situation to gold, but I think it's a great mistake, which will snap back quickly. So when gold does start to outperform, my bet is it doesn't crawl back. It does something fairly explosive in terms of net price gain. So we're still quite bullish on the monetary metals, and we think this is a bear trap situation, especially for silver. And don't pay attention to the commodities in relation to silver. Pay attention to gold.
One last question with respect to the miners. Obviously, we're seeing a sell-off in the miners as well. Along with this, do you see that this could be related to maybe money managers moving into the space, or do you see this just kind of people are selling because of margin calls?
Probably the latter. We do know that leverage in the U.S. stock market is like triple its norms, okay? Triple any prior time. I've seen studies on it. I don't pay that close of attention, but that's an interesting fact. And therefore, this drop, which is now maybe getting to the point of creating margin situations, but we do see a bounce point in the S&P, a potential bounce point. It better well bounce from there. But that's down another, like we're trading near 5,100 today. The S&P looks like it might have a bounce point at 4,800. The NASDAQ 100 is trading in 17,500 area. It might have a bounce point in the 16,000 area. So a good handful of percentage drop, 6, 7, 8%, and you'll get to a possible bounce point. Not a low, but it could. But that's still not a crash dimension, actually. You know, if you think about it, 30% drop is a crash in a matter of a couple of weeks. That's what happened in October 2008. And so far, though, we've had a sharp drop in stocks from the highs of a month ago, February, I think it was, to the present. It's still not crash dimension, and though you get a bad day here and there, there's not like a 30% drop. Who knows, maybe we'll get it. Now, if S&P ever violates 4,800 substantially and closes a month out, like, you know, much under 4670, let's say, I'll give you a number. At that point, you're blowing some other momentum structures that say all hell could break loose. But right now, we tend to think you could have a bounce point around the 4,800. Now, you know, that might get relief to the commodities, and silver might bounce. But right now, I'd be focused on gold and silver as basically the only place to really be when the central banks panic, realizing what is actually going on, especially with financial institutions.
So last thoughts then for our viewers. It seems like the broad overview might be that this shift that you've been talking for a long time of people moving from stocks into gold is showing strength, you know, only down 3% when the stock market is down quite a bit more. So is that shift happening right now?
I think it's been happening ongoing for the last several months, where early money has been moving out of an asset category they deem to be too high risk, too low reward. Even though it hadn't dropped at that point, you know, January, February, the money was starting to move. That's why miners, for example, shot up substantially over the last several months. In fact, XAU index and GDX, the ETF. If you look at the last 3 years of action since 2020, they blew that stuff out. It was a ceiling. And yeah, you pull back slightly below, but you closed last month substantially above it. And I'm going to bet by the end of this month, you're still substantially above that range that prevailed back to 2020. So their price action has just woken up. And I think more of that money will flow into the miners, especially as the perception hits that this really is a bear market in stocks. The talk of correction is starting to get a little wobbly right now.